Welcome to TaxBeat with Fitzroy Henry. Join us as we talk about tax issues of interest to you and your family. When was the last time you said, "I love my tax preparer"?
Hello and thanks for tuning in to TaxBeat. Today we are speaking with Fitzroy Henry, an accountant for Cornerstone Tax Services in Clinton, New Jersey. Today we'll be discussing sole proprietorships. Welcome, Mr. Henry. Our first question is, what does it mean to be a sole proprietor and what are one's characteristics?
Well, a sole proprietor is a business organized for the purpose of profit. It must have a profit motive. He generally has one owner and generally must be registered with the state that you're doing business with.
What do I have to do to become a sole proprietor, and would I need a tax ID number?
All the laws of the states are different, even though some of them have gone to a more standardized form. But in general speaking, you will register with the state, whether under a fictitious name or a name that you have modeled after your own name. You will register with the state, and the state will go through some process where they will verify that the name that you're attempting to use as your sole proprietorship is available to be used in that state. Once you have cleared that hurdle, they will ask you then if you have a tax ID number. Now, here is where I would advise that you will go to the IRS's website and try to apply for a tax ID number or EIN number that will separate your business from your personal social security number. Obviously, you know, with the issue with identity theft, it's probably more advisable to do it that way. Once you have that, you'll go back to the state and they'll ask you for items such as your business address and those kind of things. And then once your registration is complete, maybe some states charge a small fee, but once the registration is complete, you're in business, sole proprietor.
Can you tell me the web address?
If it's New Jersey, it's www.nj.state.gov rather, and in there's a link that says register your business. The IRS's website, once you go onto the www.irs.gov, there's a link, or you can use a search feature to say, which says rather, register for EIN.
And once I do that, will I hear from the IRS?
Actually, it's a very quick and highly automated process. Once you have gone through the prompts that the IRS has on the website, it's very simple, 3 or 4 steps. They'll ask you your type of business, will you have employees, is it a not-for-profit, so on and so forth. Once you have gone through that part of it, it would then assign you an EIN on the spot, which you can print out as a PDF document, and you have your EIN number immediately.
So I would be official as far as the IRS is concerned.
As far as the IRS is concerned, you have a tax ID number, and they're expecting you to file a tax return with that tax ID number for whatever business you have conducted.
What else do I need besides the tax ID number and a fictitious name? Will I need to form a corporation or some other legal entity?
One of the limitations of a sole proprietorship is that you are one with the business. It is called a disregarded entity, where if you are a sole proprietor, even though you have a separate EIN, separate from your social security number, you are one with the business. It will go on to your normal 1040 tax return as a Schedule C item.
What else should a sole proprietor know about tax planning or financial planning?
I've heard this whole saying that the attorney who has a client for his own attorney is a fool. In the same sense, you shouldn't try to be your own accountant. I suggest if you are going to become a sole proprietorship or in any form of business for that matter, you consult with the people that know. So you find yourself a good accountant, find yourself a good attorney to get the proper guidance you need. And even then, the government has published some really good information on your state websites as well as the irs.gov I mentioned earlier. One of the things you want to be concerned with is that you, first of all, from a legal standpoint, are properly organized, have the proper insurances, have a proper business plan, and you have something that will, can be conducted legally in the state you're in that would generate some profit. Now, from a tax standpoint, according to the tax law, all income is taxable, regardless of the source it's derived from. They do offer some graces where some things won't be taxable, but that's a little bit further down the line. But just from the outset, one thing you want to be concerned with is that if you are going to have employees, that you're properly registered to administer payroll, and that again requires some additional discussion. But just from a very generic standpoint, you want to have a payroll ID for the state you're in. You want to make sure that you are registered as an employee in the state you're in. You want to make sure that when you set up your tax ID with the federal government, you do check the box that you are going to have employees and that you are in fact filing your payroll returns.
As the owner of a sole proprietorship, how do I pay myself? Through payroll, or do I just write myself a check?
It is a good practice, and I've seen this happen with some of the clients where they will get a paycheck for the sake of withholding. It's not required, but it's a good practice. And why I say that is this. As a sole proprietor, you really can't pay yourself. It goes into an account called drawing. It's really you taking money out of the business. You're really not on a payroll because you're not an employee of your own self. But it has been a practice that the owner takes a paycheck in order to go through the whole rigor of what the payroll recording would be. So when you are filing your tax returns at the end of the year, you do have these taxes that you've already paid in to the payroll system or the Social Security system, and will kind of minimize the burden at year end some.
And if I choose not to do it that way, is there any sort of planning I need to be aware of?
Indeed, and this is again refer back to having the proper professional in place before you start walking off and doing your own business. Where they should have advised you that you are going to be required to do estimated tax payments if you do have a net income for that period or for that year. Further to that, if you are taking money out of the business, obviously you are making money. So in the eyes of the government, you should have made some sort of estimated payments, provided that those estimated tax liability amounted to more than $1,000 for the year. That way, you could avoid a penalty by making those estimated payments.
Are there local tax issues I need to know about as a sole proprietor?
Well, depending on the nature of your business, you might be faced with local taxes like sales tax, use tax. If you are in a business where you're selling products or rendering services which your state defines as sales taxable, you have to check with your local state for that. Say, for instance, a state like New York or New Jersey says that if you are doing certain type of repairs that does not capitally improve the property you're working on, then those services are taxable. You must collect the 7% sales tax on them. And with that being the case, you collect it, you become the agent of the state or the taxing authority, whether it's a local city government or a state. Then you must remit it on the filing date, which in New Jersey, 20th of each month. Further to that, you might be subject to some payroll withholding tax that you must remit each month, each quarter. There are payroll returns that must be done, sales and use tax return that must be done. If you're in a leasing business like a rental business, you must collect use taxes. And again, a tax professional can help you into more depth, a more discussion about how to avoid being penalized.
Are there any Social Security taxes that I would need to know about as a sole proprietor?
Well, Social Security taxes are interesting. And when you look at it, it's really in the same sense as payroll taxes. And when I say that is this: if you are a sole proprietor, you're the business. So if you're in business and you make $100,000, you would pay the same portion of Social Security as if you were working for someone else. So as it stands today, Social Security tax rate is 6%, and the employee portion is 4%. You, being a sole proprietor, pays the employer section, the 6.2%, and the employee percent of 4.2%. Plus, there's a Medicare component, 1.45%, that is taxed to both the employer and the employee. So between the two, you pay an additional 2.9%. So all in all, you're paying those taxes as an employer and employee. Those taxes, if not done through an estimated payment, are done and calculated on your personal income tax return as self-employment tax.
What tax forms does a sole proprietor need to submit?
Well, the 1040 is the main form, and that's only 2 pages. And with the 1040, there are supporting schedules that eventually flow into the front or back page of the 1040, mostly on the front page. Those supporting schedules, for instance, for a sole proprietor, will be a Schedule C, where you report your business activities. If you have a payroll, if you have a self-employment tax that's due, there's a self-employment SC form that goes with that. If you have certain personal deductions like your mortgage and such, you have a Schedule A, and there's a number of others. But concerning your business, the ones of note are the self-employment schedule, the 2210 for employment taxes if you underpay your estimated payments, and the Schedule C.
How important is record keeping, and what's the best way to keep records as a sole proprietor?
Well, part of the requirements of the tax code is that you keep records. It's a requirement, and the government doesn't go through the job of defining how you should keep records. Rather, it tells you that you should keep them and how long you should keep them for. Now, again, this is where a tax professional can help you define the best way for your type of business to keep tax records. But if you're planning on doing bookkeeping yourself, there are some affordable software out there, QuickBooks, Peachtree, My Own Business, MYOB, just to name a few, where you can record those even in Excel, or like some of my clients do, put it all in a shoebox and give it to the accountant. But the important things to remember here is that all things that passes through that are necessary and ordinary business expense, you must keep a record to substantiate if those expenses, if you're planning on deducting against your business income.